So into the charts we go, and bottom line is we're seeing a solid bounce in the crypto markets. Part of this was spurred on by the CPI data this morning coming in lower than expected, meaning less inflation than the market and investors had anticipated. That gave risk assets a little bit of a bump, and again, you could see a beautiful bounce on Bitcoin. Now, notice where Bitcoin's running into resistance. Remember that downsloping trend line that we had broken out above, then a couple days ago we had retraced into it. See this tail right here? And then bounced, and now yesterday we closed below it. Now it's getting to be minor. It's only minor resistance, but minor resistance can still stall a chart out in its tracks. Now again, folks, this is exactly what you need to remember about trading anything. I don't care if it's crypto, stocks, commodities, currencies. When there's fear and panic, assuming you're going after good quality stuff, you start accumulating. All right, fear and emotion, greed is emotion. Those are the things that you go opposite of. So yesterday, when I picked up Quant was at a technical level. Remember what I said to you guys in this very video. I said you got to shut your emotional brain off. You got to go by the charts. And what happened to Quant? It bounced. Now, it did go through that level because of the panic in the near term, and then it shot right back up. Today, we got out really right here, right around just above 130 or so. It went a little bit higher, but bottom line is, the buy was right here. You can see it actually pierced it. And then look at the snapback. Booked our profit, 10% off to the races. All right, so again, this is where we're at right now. The crypto market is stabilizing just a little bit. Again, we've seen Solana get a good bounce. Solana actually got as high as $19 today after touching the 12s yesterday. Huge, huge move. I love the action in Solana. I still think, again, we come out of this, Solana's back in the $20 range. And again, we're going to be in the money beautifully. Looking at some of the other crypto plays that we have out there. Again, we booked Quant. That's done. We're done with that. Solana, we have an $18.13 average price there. Remember yesterday I added, but I said to you guys, listen, we do want to be a little conservative here. We don't want to accumulate too much because there obviously could be more catastrophic issues out there. So I felt 4.5% of my portfolio was the right amount. Kept it there. I think that average is a very good average. You get a bounce back here. Like I said, Solana's back in the 20s. Avalanche, I didn't get a chance to add to that because it just didn't go low enough where I felt comfortable. But if we go to AVAX here, let's take a quick look here. And you can see, again, beautiful bounce back, trading back to $15.36 after basically kissing $12 yesterday. My average price, $16.67, only 3% of my portfolio. And then, of course, there's Cardano out there, which I continue to like. Let me bring up Cardano here. And if we go to Cardano, you can see, again, beautiful retrace bounce here as well. But the question is, this is going to be resistance now, right here around 38 cents. If we get through that, we can go test these highs here at around 43 to 44 cents. As I mentioned, Solana had a big bounce, although it has come back in just a little bit. Here's your Solana chart, folks. Really, by far, aside from FTX, the one that had the biggest collapse here, at least in the big crypto players. And again, going from, remember that, again, we traded this multiple times, making some good money off of it, but it went from $38.80 all the way down yesterday to $12.50, then back to almost $19, and it's currently sitting at around $17. Really amazing, folks. The volatility obviously is insane. And again, it was the calm before the storm when we were stuck in that wedge pattern. That's what wedge patterns are. Always remember that in the future. Wedge patterns are periods where it's basically like a triangle coming to a point. So price is getting less and less and less volatile, and that's what creates the wedge pattern. And then once you break, things get crazy. All right, if it's a good quality wedge that has been nurtured over months, for instance, when it does break finally, usually the fireworks begin. In this case, absolutely. And it's weird, right? Because it's almost like we broke out of that wedge, and then you had the attempted breakout to the upside and move, and then it was like, nope, now we're out of the wedge. We're going to make it a little crazy, and then a black swan event like the FTX then came out of nowhere and basically clobbered the crypto markets. Now, what's amazing about this is that we're starting to get towards that next target on Bitcoin of 12 to 13,000. We got down in the 15s yesterday afternoon. We then bounced all the way, I think, close to 18. Now we're in the 17s, the low 17s on Bitcoin. But again, at this stage of the game, you have resistance right here and then resistance here. All right, this is going to be your bigger resistance now. Now, you haven't confirmed. I want to be clear on this. I find this fascinating because, again, this is why this line is minor, and yes, this one's minor, but it's a bigger one. In terms of rating minors, right, you can have minor, you can have a slightly stronger than minor, you can have mid-level, you can have major, right? Major resistance is the biggest resistance of them all. In this case, this is the minor one. And again, you can still see it's still having some impact. This would be more than minor. It'd kind of be like mid because it still hasn't confirmed. Once it confirms, it becomes major. So you still actually have a door here where it's not major resistance up here if we could get back above it. But again, we'll have to watch and see how that plays out if the markets are able to do that in the crypto market. I'm not sure at this point. I think there's been some major damage done. And again, it's long-term. Bitcoin is going to go up massively. I've talked about my HODL positions. Again, I'm getting ready to buy another HODL position if we go probably down to about 15 or so, or maybe a little bit below 15. But I want us to recognize that the psychological damage in the crypto market just continues to get worse. And it's very much like the dot-coms, right? I mean, it's very much like the dot-coms in that you have these scenarios where investors are getting screwed. They're not only losing money in crypto because crypto's going down, but then you have these kind of misappropriation of funds. FTX apparently was doing some stuff they shouldn't be. We saw what happened with Voyager and Celsius, and it's just more kind of straw that's breaking the camel's back, essentially. And this is going to take a long time for people to trust the crypto market. Number one, I would say that anyone who said that regulation wasn't needed in the crypto market, you have no clue what you're talking about. Okay, yeah, we obviously want good quality regulation, but you know what? When you don't have regulation, it's like the fox watching the hen house. These people, when there's no regulation, are going to do shady things. And why would you ever want to have your money with a company that could potentially be unregulated and do shady stuff with your money, and then you just don't get it back? I mean, regulation is so important in this industry. And again, the key is the good regulation. But it always blew my mind back even, when we were at all-time highs, I was still screaming for regulation in the crypto markets because, just the mere fact that your money could get stolen out of your crypto account and you don't get it back versus if you have money in a stock account and someone steals it, you get it back. It's called FDIC insurance. I mean, so think about how many people that have mega money are like, there's no way I'm putting money in crypto if that's even a risk. I click on the wrong link, someone steals this or does this or hacks that, you're screwed. And I think that, again, is just one more thing. And so you got to get regulation. You got to get transparency. We look at the stock market, and a lot of people, I feel like, have a negative view of the stock market. But in reality, the stock market is more transparent, especially when it comes to companies. Every quarter they have to report earnings. They have to do disclosures. They have to do this. If they're buying their own crypto, or in that case a stock, they have to disclose it. If Warren Buffett invests, $1 billion in a company, he has to disclose it. I mean, these are all things that even the playing field for small investors, and we need to know this stuff. So anyways, I'm done with my rant there, but I think, again, ludicrous to not want the good regulation out there that creates transparency, that creates firm rules and penalties if these companies, like an FTX, break what they're supposed to do. All right, in any case, Bitcoin into resistance here at 17.4-ish, we'll call it, then resistance at 18.4. Those are your two levels. If by chance it gets back above 18.4, then it actually has a shot to get all the way back to 21. Again, I'm leaning towards less and less likely of that scenario, but you just never know. Maybe it can. I think it could at least attack this 18.4 level, which then in that case would probably give us a nice profit on Avalanche, Solana, at least, and obviously we took money on Quant at this point. All right, so let's go over a few other ones. Let's look at Ethereum here, see what Ethereum did. Ethereum never got down to my buy level. I think yesterday I talked about this $1,000 level right down here. Nice bounce on Ethereum today for sure. But again, just never got quite low enough for me to nibble on it. If it does get down there, now it's already bounced and it actually came semi-close within about $80 of it. So I'm not sure if I would be interested in that same level again. I'd have to see. Do I think eventually Ethereum's going to go even lower? Yeah, I do. I still have this as your target down here. I still have around 400, just under $500. So again, it's not to say like, when I talk about my downside targets on Bitcoin, and again, still 12 to 13,000 is a huge amount of support, right? So you're going to get a significant bounce there, at least we should. And then really what you're going to look for at that point is saying, okay, well, if we get through that, where's your next stopping point? It's going to be 10,000, the even number of 10,000. There will be a wall there. There's going to be a lot of stops there, so they probably pierce it there. And then if you continue down, you're, worst case, and I talked to you guys before about this, you're looking at like 3,500 on Bitcoin. Now, if Bitcoin goes to 3,500, in the very least, Ethereum's at this $470 level here. All right, whether or not it goes lower, we'll have to see. Again, please understand that we're in a particular type of bear market that is different from past bear markets. Again, I've heard so many talking heads and influencers being like, all right, well, we should, the lows should be put in November or in whatever, and we should be up and away. Well, yeah, that was the way the last cycles worked when the Federal Reserve was printing money and doing quantitative easing and the government stimulus. There was a lot more money flooding the system. Now money's being sucked out of the system by higher interest rates. So you have to recognize that. I do think that means it's going to take longer for us than a usual cycle to get back to the all-time highs. I could see maybe by 2025, maybe by 2027, somewhere in there. But I don't think within a year or two we're back to all-time highs personally. I don't think by late 2023 or 2024 we're back to our all-time highs. Eventually, do I think the Fed's going to print money? Yeah. I mean, we'll get in a depression-type scenario because the Fed pulled forward so much growth, and, you're going to see things just go downhill, continue to slowly go downhill until they're going to be forced to print again. But, yeah, it's going to take a while. They're going to be very reluctant considering they got burned on the inflation bug, and they looked the fool by saying transitory so much. And then, God, I mean, how many interviews did I do back then? And I just kind of was like, they're insane. They're literally smoking something to say it's going to be transitory. All right. In any case, let's go on to some other charts here. How's Binance doing? Binance getting a little bit of a bounce. It retested this area right down here. So again, we'll watch that and see how that plays. Good bounce here. In terms of buying, this line down here would be my buy. So again, still would have to dump out even more. So that's one to watch right there. Let's take a look at Matic. Matic, I was so close to buying, kicking myself for not buying it. It was right down here. I had a buy level right here at around 74 cents. And look at where it went. It went to 76 cents. And then look at the bounce back on Matic there. Let's take a look at XRP here. XRP, where did it go? I mean, is this amazing or what? And again, honestly, I'm kicking myself. I don't usually trade Ripple. I don't look at it as often because, again, it's got this judge decision looming, and so I try to stay away from that nonsense. When it's anything that could mess up the chart analytics, then I try to stay away. But, I mean, honestly, look at this. Look at the line. Look at the price action. And remember, this trend line goes all the way back here through these lows. Where did it go? Went right there. And there's your bounce. I mean, that's charts 101, folks. It's the beauty, the amazement of charts. I just continue to be floored by it, and I've done this for 20 years, and charts still blow me away. All right, guys, I think that's really all I have for you today, but awesome stuff. Again, awesome to be able to generate some returns and then to see and accumulate some of these things and watch them start to bounce here. And again, it's not to say that the lows are in. By no stretch do I think the lows are in crypto, but I do think, again, that you get these panic periods and then cooler minds prevail, which creates a bounce. Then the small investors start chasing and you get the technical bounce. Then the next flush will come in. It's a very constant. Think of a wave from the ocean coming up and receding, and then coming up and receding, and then the wave is the fear, and then it recedes and people relax and they buy back in. Then another wave and they freak out, and that's the way the market works. That's human psychology, how it works, right? So just keep that in mind. You guys have a wonderful rest of your day. I'll be in touch. Take care.